Let's talk about the growth prospects for telecoms in general. We're told that return on equity is somewhere in the region of 13%, or it was so prior to the credit crisis. Is it still a good space to be putting in your money?
Of course, I think it's still a very good space to be in at this point in time when you're looking at operators like, for example, Econet, where you're looking at the return on equity being well ahead of about 35%. When you also look at markets that have been competitive like Kenya, where you're looking at Safaricom is still above 27% on a return on equity basis. Of course, there's been a bit of disruption in terms of competition. Obviously, when you look at the Kenyan market, when Airtel entered Kenya, there have been fierce price wars that are coming through. But our view as African Alliance is that the price competition environment is probably moderating right now. And we're obviously looking at then having a better performance for Safaricom going forward. For
new entrants, what are the prospects for growth and profit? And I'll tell you why. 510 million subscribers on a continent that has almost 1 billion people, so there's still phenomenal room for penetration. But when you consider that we still only just use cell phones to phone and to SMS, we're not really using data services, and we're told that data is really where the money is at. The question is, where's the profitability?
I think when you look at EBITDA margins, you have data being very profitable compared to voice. But the key issue right now, like what you're saying, most of the customers will be using voice because the devices are very expensive at this point in time. So what operators should probably be looking at right now is probably to offer subsidized handsets. But that becomes a challenge because you're looking at most of these markets are predominantly prepaid markets. So it becomes very difficult because you need to offer these devices on a contract basis. But we've seen innovative operators like Safaricom coming up with very cheap sort of Chinese-made smartphones, which runs on the Android operating system. So that will obviously go a long way in trying to stimulate the usage on data. But no doubt, data is highly profitable compared to voice.
Regulation regarded as a huge impediment. You've spoken about the changing conditions in Kenya, and definitely with the CCK coming through and insisting that operators slash their prices, it's had bearing on margins. But the CCK has also come through with other kinds of interventions, like trying to remove licensing on 3 and 4G networks so that new operators can come to the fore and really stimulate some sort of competition. But there's just a sense that there's the heavy hand of the regulator in these markets, which doesn't allow for pure organic growth motivated by competition.
I think when you look at regulations, there are two sides that should be looking at it, because the regulators also have to work to protect the consumer, and they also have to sort of promote industry profitability. But when you look at Kenya, what has basically happened right now, we've seen the mobile termination rates, they've been put on hold. They were supposed to be reduced in the past month. But that obviously works positively for most of the operators, because now, obviously, when you look at termination rates going down, you will be expecting that calling tariffs will also come down. But then when you also look at the consumer side, the consumer wants the price to go down. But then I think a regulator has to strike a balance. When you look at, for example, in Zimbabwe, the regulator has been quite accommodative to the industry. They've basically been saying, for now, they will not reduce the tariffs because they want to promote industry profitability. But at some point, they have to try and make sure that the service becomes affordable to the ordinary person.
Talking about those reduced prices, what's the strategy then when you're an investor? We've seen Bharti come through. They work well within an environment of low prices because they're on a high volume program. When you don't have that reach, you know, because of your network, because of the technology, what do you do?
I think what you basically have to look at is, obviously, as you penetrate into the low users, the profitability becomes obviously very low. But what you need to consider is, when you're looking at a telecoms business, the key important thing for you to look at is probably your EBITDA margins. If your EBITDA margins still remain well above, that you remain profitable, that will still be a key thing. Because right now, when you look at most of these companies, they're still operating at a return on capital employed well above of 20%, and their cost of equity is well below around 15%. So that there should be still room for profitability, although we basically agree that as you dig deeper into the low users, then the profitability levels become compromised.
In some of the key economies, South Africa, Nigeria and Kenya, there's the dilemma of the fixed line operator that's been there for over 3 decades and must now find relevance in the wireless space. How do they approach this market?
I think it will be quite difficult for the fixed line operators to get into the mobile space, because when you look at the present time, you have most of your mobile operators, they probably have a significant market share. When you take, for example, when you're looking at Zimbabwe, an operator like Econet already has about 60% of the market. So if you're a fixed line player, you can probably get into that space. probably by trying to bundle up your products. That's the only way you can probably attract your new customers. But just in terms of trying to get that critical mass that you can probably fight it off with the market leader, it will be quite tough. Probably you can get some operators who will try to compete on the basis of price, but that's not really a very smart way of looking at it, because all you're basically doing is bringing down industry profitability. But as a fixed line player, you also want to get a return from the capital expenditure that you're putting into that network.
What about things like tower sharing and synergizing the operations of a mobile operator with those of a fixed line operator?
I think it's a very good opportunity in terms of just freeing up cash flows for the operators. We've seen that happening to operators like MTN and Vodacom. That has happened in Ghana, and recently Safaricom in Kenya announced that they would want to partnership with Telkom Kenya. We see that as a positive in terms that when you free up your cash flows, obviously we expect dividends to go up as investors. But obviously there are a lot of issues that come into play, because there's a lot of issues with information leaks between operators. So you'll find some other competitors also who are still trying to compete on the basis of coverage. So they'll basically say, if we share the infrastructure, then my competitive advantage was that I was covering remote areas. Now all of us are basically sharing that infrastructure. So we still have to get to a level where there needs to be acceptance in Africa.
Telecoms stocks and their performance, do they tend to outperform all share indices, for instance? Do they do really well?
I think in the past 1 year has been a tough year when you look at sub-Saharan telecoms, excluding South Africa. But when you look at South Africa, it's been a different sort of performance. You're looking at Vodacom and MTN, they've done very well over the past 1 year, more than, I think, 30% return to investors. But when you look at operators like Safaricom, where the bad news flow has obviously affected the share price, the stock price has really been beaten down to about, I think, 37% over 1 year. But you still have Sonatel, which has done okay. I think it has done about 12% year to date. But I think the question now moves to where should investors probably park their money. Right now, we're quite bullish on Econet of Zim. We basically think that the competitive environment is benign, and we think the regulator is quite accommodative, and we're obviously seeing growth coming through from data. So at this point in time, I'll probably say maybe if you park in your money at Econet, that'll probably be one of your good bets for your telcos in SSA.
And the environment in Zimbabwe, that's not going to hamper anything that you do as an investor?
I think obviously when you look at Zim, there is the politics that comes into play, but obviously the government of national unity has been working. We've been expecting elections to be held this year, but our view is that I think the elections are going to be pushed back maybe to next year. So obviously the outcome of the election will have a bearing on that, but aside the political risk, we still think Econet is a decent asset to own.